Good morning, everyone, and thank you for joining today's session. I will give a couple of minutes so that the other people also can join, and we will start shortly. Thank you. Welcome, Harsh. Welcome, Tafsif. We're just waiting for Pratik as well, and then we'll start shortly. Thank you.
Sure. Morning, John. Hope you're all well.
Morning. I think we can start. Good morning, everyone, and thank you for joining today's session, Foundations in Action, Navigating Structure, Tax and Banking in the UAE. I'm Jahangir, Commercial Director here at the RAK ICC, and I'll be your moderator and host today. The UAE has quietly become one of the most active, well-structured jurisdictions in the world. Foundation registrations have grown more than fivefold in the last 5 years, and the conversation around how families and globally mobile clients structure their wealth here is evolving fast. Over the next hour, we'll unpack what's really driving this shift, and more importantly, what agents and advisors need to know to guide their clients through it well. So I'm joined here by my exceptional panelists, each bringing a different lens to this conversation. We'll be having discussions on the structure, tax and legal, operational and banking sides. So let me introduce them briefly. Harsh Patel, Water and Shark Legal. Welcome, Harsh. Harsh is the Advocate CA. He is the founder and global CEO of Water and Shark and one of the most sought after tax and legal advisors. He stands at the intersections of legal, tax, and advisory, leading one of the most progressive multi-jurisdictional advisory firms operating in more than 12 plus jurisdictions. I have Tafsif as well. Welcome, Tafsif. Tafsif Rahman is the head of marketing at HappPay, leading the company's growth, brand strategy, and market expansion efforts. He plays a key role in positioning HappPay's financial solutions for businesses and cross-border clients, with a strong focus on digital payments and financial innovation. excuse me. Perhaps we can start with Harsh before we have Pratik to join us. Excuse me. Harsh, from your one touch point advising across 12 plus jurisdictions, how should agents approach structuring for globally mobile clients beyond just thinking about asset ownership? If you can just shed light on this, please. Thank you.
First of all, thank you so much for giving me this opportunity to share my practical insights and the experience, and deepest gratitude to RAK ICC. And thanks to amazing co-panelists as well. So, answer to you first, based on last 1 decade, we have seen, and I'm sure most of the agents here or the professionals will more or less will agree with me. Succession, family or a corporate, by and large, in UAE and the Middle East region, have been misunderstood with the concept of consolidation, like asset ownership. So I'll give an example. When somebody asks to us as a professional that I want to set up a holding company because I want all the properties and all the companies in one company and my succession done, that's not the answer. When the asset ownership is playing a role for a succession or a structures or anything, then we are just focusing on the ownership. We are not focusing on the ownership control, beneficiary flows, and the control governance. Why these three are paramount importance and extremely importance, not just the ownership, because across the world, ownership is relevant for determination of a tax, substance, and so on. In today's time, the control is the key. How do I say so? And how do we make sure that that is in reality and practically it impacts? Take an example, the ownership means the beneficiary may be Mr. A and Mr. B, comprising from different nationality and residency. But if the control is in the UAE, then it may possible that the ownership sits at the country A, but the control is at the UAE level. And that's how the ultimate we are able to properly ring fence in reality. If we set up the plain vanilla foundation just mere for a consolidation of ownership, then it may happen that you may have created a beautiful structure of umbrella of foundation, and underneath the variety of operating companies, properties in UAE across UAE, you may have transferred it to foundation, but at the end, you have just created a one more additional piece of paper that is a foundation and a structure to your group without giving in reality the ring fencing of firewall protection, control per se in the jurisdiction where your foundation is there, exposing your families or your assets to a foreign tax, uh, and various other unforeseen challenges that may one so. So in nutshell, if I have to give a one crux, attention needs to be shifted from what client is required to do for a consolidation for ownership to intent and the objective based futuristic, and that is what is required as a foundation, because foundation or a trust is such a beautiful umbrella which is not just to be seen as akin to a holding company in any free zone and just consolidating all the assets. That's why as an agent or as a lawyer or as an accountant, we must ask and do not just listen that I want to set up a foundation to transfer the property or else. We must as a professional ask what is the real intent behind it, where your family is going to be in coming 10 years, 15 years, 20 years. What structure you prepare today may not be relevant or may not be withstand with any future challenges that may come to the family in future. That's why the control, the governance, and the benefit flow, all these three are extremely important, and then only the structure will able to give you the best result that you objective uh, to achieve. Thank you.
Great points, Harsh. Thank you very much. Indeed, I think intent and, as you mentioned, the generational wealth transfer and the structuring is very important. So if I may just bring Pratik back here. Pratik, welcome. How has the profile of clients considering foundations changed in recent years? Because I know you sit right in the conversations when the formation comes. So if you could just shed your light, especially the practice here in UAE, please. Yes, Pratik.
So we at Creative Zone, we deal with most of the family office as such and most of the established businesses in the region, right? However, we also deal with a lot of entrepreneurs. They're coming in the region, they're trying to relocate themselves in the region, as well as their intention is that while they have their existing business around the world, they also want to secure their wealth internationally, as well as build wealth in the region. Hence, the ask has been more by the families that, well, while I'm actually setting my base over here and I intend to move my tax residency in the UAE, I also want to ensure that all the structures that I implement, which are in other offshore jurisdictions, how I can have those structures over here. So the ask has been more by most of the entrepreneurs as compared to family offices, where you normally have family offices asking for these structures, and also people who are looking to not just invest in real estate, but the intention is to own their businesses locally as well as internationally, as well as people who are actually investing in ETFs and stocks and bonds effectively. So that has been an overall understanding that we have gained in Creative Zone, where we see most of the people asking for foundations. Well, I do echo what Harsh is saying. The most important thing is foundation is not a plain vanilla structure where you just go ahead and create a foundation and you just transfer the assets. It's a legacy planning, succession planning tool. You really need to understand where your assets are based. You really need to understand what is your tax position being a founder before you go ahead and set up a foundation.
I see. So if I'm hearing right, so you're saying this, especially the wealth transfer, the intent again, as I think you're echoing what Harsh mentioned, is very important. So from that point of view, when you are talking to the client, especially in the foundation setup stage, what is the actually triggering point, if you like? So what does perhaps factor which triggers them to come and then set up a foundation? What are the factors? If you could just list them, a couple of them. Thank you.
I mean, the key factors is they have investments in real estate. It's a tangible asset. Tangible assets cannot be just moved on effectively. You cannot migrate any tangible assets. So they always ask for creating a foundation mainly for the tangible assets itself, where they can create a foundation. They create a property holding SPV, which is also possible with RAC ICC. And under that, they own the real estate. That's one of the scenario. The scenario two is where they are acquiring shares of certain businesses and they want to ensure that given that the value of the shares or the company and the investment which they're doing, they want to ensure that they put proper legacy planning in that. They create foundation, they create segregated portfolios or different incorporated cells effectively to structure it, as well as to invest in stocks and bonds. So foundation itself always is not directly owning any asset classes. There is always a segregation. There's always an underlying holding company which is limited in nature, where the liability is limited in nature to own the underlying assets.
Understood. Understood. Thank you for your points, Pratik. So if I can come back to you, Harsh. So because once the client decides to act, right, the structuring question becomes much bigger, right? So now we looked at the formation part from the Pratik's explanation. So what comes next, Harsh? I mean, because I know you have experienced more than 12 plus jurisdictions. So how should agents approach structuring for globally mobile clients? So let's perhaps expand expanding perhaps the coverage of it. So beyond just thinking about asset ownership, what are the things a globally mobile client needs to think? Harsh, thank you.
Fantastic. When we reach at the first, the mindset of the founder is there because particularly in the Asian family and in the Middle Eastern family, parting away control from your business or a signing of a check, I day in day out, I oftenly find this like 75 years old founder chairman, he still wishes to sign the check by himself, and when you shift the assets and the everything inside of the foundation, then separation of the ownership and management take place. So that means first mindset is there. When the founder mindset is established that yes, he wants to create a structure to remove the assets from his personal balance sheet, to shift to a structure which gives him a generational wealth, legacy, and so on and so forth. Now, apart from the setting up on various tools that is available, be it foundation, as Pratik has rightly highlighted, all the various uh, structures, combinations that we are able to hold the various properties and assets across UAE and globe. The most important aspects that we as a professional, we hear the tax. I do understand, and as a tax lawyer, the tax is the hardest thing in the world, and that's why we are able to make a difference by saving and planning the legitimate the tax across border. But that does not mean the tax is the only thing to look after for a family and the corporate structuring. Variety of factors that play a big role, and neglecting such factors may not able to enable the clients to even access their foundation bank account when they need the most, right? So I repeat and I echo throughout my session, you might hear control, control, control. How do we make sure at the right control throughout the client's life we continue to maintain? Enduring continuity is only possible when they have accessibility of their foundation, assets, and the funds that is required in any challenges situation. Now, what all key things that we often feel that should not never be neglected? Number one is prepare your structure or prepare anything today that is not based on the current needs, because the structure, if you prepare based on what is there in your balance sheet in your terms of be it stocks, ETF, insurance, real estate property in Dubai or anywhere, then that structure is not futuristic. We are not God, but we must plan for the future to a reasonable best we can. How do I say so? Plan for the 3Ds. Example, any structure that may we see in future, they may have risk of dispute. That dispute can be amongst the family members, right? Or maybe business operational risk and the dispute, so and so dispute maybe with the regional authoritative or governments or any judicial impact, so on business and the family. Second, divorce. We have seen in last especially the 2 decades, love is beautiful and I'm sure everyone experience in the life, but when the love is shaken up, we don't want as a professional any either of the spouse to be broken. And that is why one must prepare, because when decoupling happens, the family should not broke to a wealthy, right? And that is why it is important in today's time, particularly the country UAE. If you take an example, interreligious marriage, different nationality, a person from a one religion from a one country marrying to another religion from another country, having a children's from in that marriage, which is having another passport. Like example, Indian Hindu marrying to let's say someone from another country which is not a non-Hindu. Marriage is solemnized in the ADGM, Abu Dhabi ADGD code, and the children's born in the America having a US passport. Now, imagine when the interreligious and the dual nationality involve. This is no more subject of UAE foundation or UAE asset. It is an international, requires a careful consideration of variety of a laws, examination of the implication of the succession, tax, and financial, so and so forth. Why do I say so? The most important aspect, when we create a foundation in UAE, we might think as a professional, or sometimes the client also say, why we are going in so extent depth? But this such a far extension can only help you to plan for the future and any unforeseen challenges. I'll give you an example recently. Let's say the couple who got married in US, no American passport, Indian or British passport. They lived in California for 10 years and they set up a company in US and Dubai. During the time when they were in US, they shifted back to Dubai and now they are setting up a foundation. Husband set up a foundation, shifted all of his shares of personal shares, which is owned by himself, including the Dubai property, to a RAK foundation, which is very well allowed. Now, plain vanilla from these facts, we might feel it is simple. Own shareholding, Mr. A is shifting to foundation. That should not be a problem at all. A UAE tax professional may think that is absolutely fine. let's go ahead and do it. But from a perspective of an international law, from a California law, any property which is acquired or any investment which is made during a period of a marriage and cohabitation and during a period of California, it is categorized as a community property. That means even though husband was owning a property and the shares, but it is deemed to be a joint ownership, right? That is why it is important the UAE professionals should not act in silos. They need to have awareness of reasonably the global laws. So in this my example, when the husband is transferring the property to a foundation, consent of wife is required, without which even though property is in foundation, court may order to give it back to the 50% share to the wife, right? That's why
Thank
it
you.
is important to understand the international family laws which impact the family succession, family impact. Third, I will say duress. Why this duress is a very much important, and I believe in the recent time, just couple of months back, RAC ICC have also uh, introduced the duress provision in the specifically bylaws. But in our practice as a lawyer, since last 6 years, we are being actively, proactively advising and encouraging all the clients to inculcate to habit of including the duress provision in the bylaws and charter. Do not accept the standard template. Standard templates are standard template of bylaws and charter that may not suit your family or your businesses in a specific circumstance or requirement. That is why it is extremely important all the challenges that you may foresee, right? That should be included as a duress provision, and accordingly, that can help us to continue to have access and control during such unforeseen circumstance. So, if I have to summarize, I would say dispute. We cannot predict the dispute, but at least we may provide the mechanism to solve such dispute in a foundation bylaws and charter. That is extremely important while we sit and understand the life journey of the founder, family, and what they want. So at least you can, as a professional, from your experience, you can understand the what dispute that may arise in the future and how do you protect it and to resolve it. Second will be duress, any unforeseen challenges which include geopolitical crisis or regional crisis or maybe economic or difficulties to the founder or the family. And third will be divorce. By inculcating habit of all, including all three such, I'm sure it will be not able to just the structure will enable to make sure the current consolidation and control of all the assets and ownership from today's time, but also will prevent any future such challenges or that may come across to the family. They'll able to navigate uh, easily. Thank you.
So, thank you, Harsh.
Oh,
I
very
think
good
this,
point, Harsh. I just want to add something on this. In fact,
yes, please.
most of the families which we deal with, they just want to pick up the standard charters and bylaws. And this is what we always say, do not pick up the standard charters and bylaws. Your objectives are meant to be very clear. When you create a foundation, you should be very clear why you're creating a foundation. What are the mechanics you're going to put in place? Who are the council members? What is that role? It's very simple. When you go and work for an organization, you need to know what is your role, right? The same thing. When you create a foundation, you should know what powers the council members have, what is their role, and understand that in the foundation, like in a trust, you have a role of a protector. In a foundation, you have a role of a guardian. People neglect this role completely. It's such an essential role. It's such an essential role. So, drafting of charters and bylaws are the key point of any foundation. I really wanted to mention this, Harsh. Most of the clients which we deal with, we actually tell them that a foundation structure is not well equipped until the charters and bylaws are drafted effectively.
Great. Thank you, Harsh and Pratik, for your great points. I think this is a good moment to bring, I think, Tawsif in because we are discussing from the structuring perspective and from a legal perspective. And then earlier, Harsh pointed out very important point because we usually discuss tax, but more than tax, we also have other issues. If you just circle back to one point you mentioned, especially to the access to funding, right? So usually we talk about this beautifully designed kind of structures, but the problem comes when the friction, in terms of access to money comes, right? I think this is a point where I think it's a great a point to bring, I think, Tawsif in. So Tawsif, why should banking and transactions flow be considered during the structuring conversation and usually not after? I think this is the important point. If you could just shed your lights on this, please. Thank you.
Yeah, definitely, Jahan. Thank you for having me in this webinar today, and great to be part of the conversation alongside Pratik and Harsh. As Harsh and Pratik both mentioned, the structural position of the foundation is pretty much very different to a holding co and other sort of structures you might find in different companies. And that is where I think what we've seen in the last few months, we've onboarded more than 7 foundations successfully. And what we've seen is the banking and transaction flows should not be a separate conversation that you have when you are creating the foundation, when you're knowing what sort of assets you're going to hold under the foundation, what's going to be the purpose of the foundation. Is it just going to be in one jurisdiction like the UAE, or is it going to have assets in multiple jurisdiction all across the world that's going to be sitting on the foundation? What sort of controls you're going to have under the foundation? It's also good to include the banking topic in that particular time zone. So I like with a lot of the agents that I've been working with to get on a call early on with the clients and explain them what we can do and how we can do it for them. Why this is helps, Jahan, I think, for example, let's say a foundation that is set up to invest in property, right? So that end-to-end transaction flow, how is the foundation going to be founded? How that fund is then going to be converted into dirhams, go into a developer's account or a manager's check, go into to close the property. After that property has been closed, how do on a monthly basis collect rents from those? How is the property managed? All those funds, etc., and the proper controls around that account. So this is what like I think clients need to be educated on early on into the discussions, so we can break down, okay, we understand on the foundation levels compared to a normal company account or a holdco, transactions will be very limited. It won't be on a monthly basis or a weekly basis as active as other types of structures. We get that. That's why we've worked with the RAC ICC team to build out the flows and the structures we can support with, and we'll be transparent with the clients upfront that, okay, if your flow is like this is how I can help you. This is how the controls in my accounts are going to work. And this is how the transaction flows are going to work with. And when you're going to do the transaction, exact what sort of proof of documents we would need. Would it be like a RAC-IC NOC for buying a property in Dubai? Or if it's a booking form from a developer with a payment structure, or is it if you've got ETFs and funds somewhere, is it like a statement of accounts from there? So these are the types of documents that we map into our onboarding flow, and we like to front load the customers on these questions and requirements upfront, so they're aware of it. We get all the documents in one go, and then the onboarding duration, which compared to traditional banks, etc., you might see it might take 3 weeks, 6 weeks, or 3 months even. Compared to that, we can do it within 2 weeks, so about 14 business days. Get the account running, get the client, give them the access. Within the access, we have different sets of rules. So, for example, the owner of the foundation has the owner access, but then the guardian council members have different admin roles as well, so that in case there's any changes on the foundation level, we can change the user level with very simple approvals on our end. So yeah, I think the legal structure and the banking solution are one decision that should be discussed in the beginning, and not two sequential decision that you set up the structure first and then discuss that later.
Perfect, perfect. Thank you, Tafsir, for this. I think you mentioned it, but just for the benefit of audience, if you could just mention, so clients realistically should prepare what kind of documents for in terms of compliance for cross-border transactions? Thank you.
Sure, Jahan. So ideally, the basic documents are your source of wealth documentation. So we need a source of wealth declaration from RAC ICC. So is it the clients, the money coming into the foundation? Is it from their other businesses in UAE or Europe, etc.? Or if it's a job they have and it's part of their salary that they're going to put into the foundation, or where's the money coming from? Second is a purpose statement for the foundation, to understand what is the foundation going to be used for. So like Harsh and Pratik, they alluded to, so there's a whole different sorts of avenues you can do, which is property ownership, asset ownership, etc. So we need to understand what that plan is from a client's perspective, and we would ask them to give us a plan in a 2-year, 3-year, 5-year bracket. So our team knows that, okay, this is what the client is expecting. And we don't, on each transaction, we don't have RFIs and delays. We already know what the clients are getting. And then besides that, it's the basic thing. So for the UBOs, if they're non-resident, we would require their passport ID copy from back home. We would need a source of funds. So either if it's a corporate account funding them, we would need the 3-month bank statement of their corporate account. If it's from a personal account, we would need the personal account statement. If they have audited financials, that helps a lot as well. And then your usual foundation document set that comes from RAC ICC, which is the certificate of incorporation, register of members, shareholders, organizational chart. So it's I've got a list of 10 to 12 documents. I can share it with you, and you can forward it to your agents. But we have worked to make it more streamlined so that if we get a full set of documents, our review time is within 48 to 72 business hours. And then after that, within 14 business days, we can get that account approved and activated seamlessly.
Perfect. Thank you for that, Tawsif. So, Pratik, if I can bring you back on this discussion. So, obviously, when you're sitting with the clients, right? So, there are some clients familiar with the concept of trusts. So, how you perhaps explain to the clients difference between foundations, which is quite popular here, a foundation, trust, and perhaps holding companies. In a nutshell, if you could just quickly explain us the differences for the benefit of audience. Thank you very much.
See, the concept of a trust is very well known in most of the other EU regions or common law jurisdictions. In UAE, there are trust laws, though. So it's not that we do not have trust laws. We do have trust laws. However, foundation is more like a civil law concept with the best practices of common law implemented. In RAC ICC, when we talk about creating foundations, or in other jurisdictions within the UAE, we talk about creating foundations. The key thing is, as Harsh mentioned, that we are in a region where people, they don't like giving out control. Right. And when you create a trust, you have to agree that you are transferring a control to a trustee. You are a settler, you're transferring into a trust your assets, and a trustee is effectively controlling the assets, again, depending upon what kind of structures the family is implementing. In a foundation, you do an endowment. It's a body corporate foundation where you do an endowment where you transfer your assets into the foundation. So there's no trust concept here wherein you are a settler and you have to appoint someone else as a trustee. There's no one you can appoint, in a foundation. If you want to, you can, but there's no such kind of requirement, right? So as a founder, when you transfer the assets into the foundation, this is where the concept is clear to the individuals that, oh, I do not have to, appoint a third party. That's where the foundation ends up being more appealing to them. The second thing is foundation itself, as a structure locally. When we utilize in the UAE, we always focus on real estate. That's what we focus on. We always say that, okay, real estate is the key play. But there are multiple purposes where foundation has been utilized. Once the awareness has been created to the persons creating the foundation that, yes, you can keep the control. Yes, you can ensure that foundation can be managed and governed by the family members without, utilizing a third party. You have a freedom to do so, but it can be managed and governed by the family members. And third, and the most important thing is, when you create the foundation, and they are very well aware that the banking solutions are available at their disposal. What we do is we rush to offer the structure. I think the first question is banking. The first question is banking. What bank is comfortable with? Do not make things more complex. Do not talk about creating a corporate entity as a founder, which you can. There's no such limitations. You can, do not rush into things saying, oh, I have my family trust. I'll put them as, somewhere in other way as guardian. You need to give clear clarity in terms of who is the person and what's the role. That clarity is once given, it works really well in the region to utilize a foundation. So always remember, foundation can be managed, governed, and controlled by the family members. A trust, as a settler, as a person, you are transferring an asset to a body corporate called trustees, right? But in foundation, it's it's an orphan body itself, it's incorporated entity itself. Trust is an arrangement, it's a piece of paper, right? A foundation is not a piece of paper. It has a document called a license, right? Clear transparency for banks. It's clear transparency for banks. You know, who is controlling, who is the beneficiary, who is the founder, you know, what's the role of the founder, how the founder has acquired the assets. All this transparency is essentially being important now internationally. There's a demand for it, and people look for transparency now. Given the common reporting standards are there, Harsh would echo this. Today, if you are sitting in India, you're sitting in another part of the world, and you say, I'm going to be the founder, I'm going to control everything, gone are those days. Gone are those days. You can't just be the controlling party for everything. Be ready with the tax bill if you're going to be the controlling party. So, foundation as a structure, two elements. Once you cover the tax element, the banking element, this structure works seamlessly. Seamlessly. From the time the MOU was signed by RAC ICC and the land department, we have transferred 300 plus properties. And we had no issues with the bank because there was clear transparency. They were able to understand who is this person, how the wealth was made, how things were acquired. In a trust, banks in the local market, they really, really get confused. Internationally, you talk at Mauritius, you talk everywhere, they really get confused. Okay, you're a trustee, fantastic, great. Service providers offer the services that, we would create a discretionary trust. It's up to the discretion of the trustees to, distribute the assets, right? Such concepts can be created in the foundation. Don't get me wrong. You can draft your charters in a certain way, you know, where you can actually show that, well, although I'm the founder, I'm transferring the control to the council members. You can do that. That's definitely possible. But overall, when you compare trust versus foundation, the demand for foundation is more because of the transparency. There's enough transparency. Don't get me wrong, trust does also give transparency. It does, but through a piece of paper, just through a piece of paper. And in the GCC region, piece of papers don't work. Incorporate entities work.
Very good point. Thank you for that, Pratik. So Harsh, just to on the same point. So as Pratik mentioned, so where do structures usually fail when clients have assets, perhaps beneficiaries spread across multiple jurisdictions? I think this is one of the key points, especially when we are looking at the spread out multiple jurisdictions. If you could just shed some lights on that, please as well. Thank you.
Thank you, John. Uh, there are a couple of factors which perhaps I will say not just a tax or fiscal, but a qualitative factors as well. But first, important factor is I have seen many founders, they getting frustrated and they get dissolve the foundation to turn it back to the again the original situation. Why? Because the structure and the bylaws and charter and the foundation oftenly is not in compliance with the banking requirement, right? So when they just rush into the incorporation, as Pratik has rightly highlighted, without understanding what their insurance provider sitting in Singapore or Switzerland they required for a PPLI or ULI or a high net worth insurance, what is their future objective. If their objective is to buy a, let's say, property in Umalquain or Fujairah, which RAC ICC Foundation may not able to own it, then it is a not future compliant. If their objective is to which is not meeting with the current future requirement, then again it is a challenge. Governance failure. You may consolidate all the assets into one umbrella under the foundation with a beautiful codification of all the bylaws, charter, and all. But have you prepared your next generation for passing on and to making sure that putting into use into right action? If no, then you are just inheriting a document or a beautiful love letter of bylaws and charter and underneath asset, but without understanding how it is being used. So most of the times, why the assets even fail to for a second generation and third generation, even when it is in the right structure, it is not just because of a tax or because it is badly governed, badly structured, or maybe structured in 2016 or 2006, which may perhaps about the best decision that time, but today it may not able to, right? I'll give you one example why we call it restructuring. Exercise needs to be done, undertaken, or audit frequently, at least couple of years after you set up. Example, when any architecture designs a building and after that contractor constructs the building, I'm sure in UAE or across the world, after 5 years, 10 years, the routine, not just the repairs and maintenance, but the architectural structuring audit is required. Sometimes even by the authorities, it is mandatory, right? Why? Because the structure and the architecture, it is not sometime once you prepare, once you make it and design it, it is going to withstand for any circumstance or any challenge that may come across, right? That is why it is extremely important. If your family's circumstances change, family needs have changed, tax positions have changed, inheritance laws have changed, then in such scenario, the restructuring exercise must be need to be undertaken frequently. Today, your son and daughters or your family members, everyone might be in UAE. But if tomorrow, if your daughter is going to UK for a higher education and after 10 years of business or profession or service, she's be domicile, tax domicile as well as long-term tax resident of UK, it may happen that even though that she is not controlling the UAE foundation, but a UAE tax consultant at the time of filing a foundation tax return, if they have selected transparency tick box. That means foundation may not be paying tax in UAE. Hence, each beneficiary are liable to pay tax on the UAE income in the home country. And we say in UAE there is no income tax, but the one of the beneficiary daughter in our my example who is based in UK may landed up paying it tax on the business or the investments which is outside the UK. That's why it is extremely important when the circumstances change as a professional and as a family both need to sit down and revisit what our restructuring exercise needs to be done. Because I've oftenly seen that I made a trust in 1995, Harsh. It is lying in the locker. I don't need. I said it is fantastic that you have a trust, but whether that is required or not, it is like a medical insurance. Even if you don't have a disease or you don't have any requirement, but we all have a UAE medical insurance. That is why restructuring is an insurance to make sure your assets and investments are protected and is going to inherit to your family members when it needed the most. So these are
Thank
the
you, Harsh.
common factors I believe play a vital role in making sure that the foundation will able to truly give the justice of what the objective it was. Thank you.
Thank you, Harsh. Thank you, Harsh, for those insights. Especially, I agree with the restructuring and revisiting point. It's very crucial. So we're just coming up on our time. I'll just let quickly run through Tawsif and Pratik, and we'll conclude, Harsh, with you. A quick 1.5 minutes each of you. So what is the last one thing agents should do differently when they're advising clients on foundations today? If you could just start with Tawsif, please. Thank you.
Sure, Jahan. So I will keep my one simple from the examples I've seen in the last couple of months, and I think it's echoed by Harsh and Pratik well as well. I would say not to rush into the process of just forming a foundation for the sake of it and just piling some assets under it. I'll give you one example. We've had a case where the agent came to us saying foundation has been set up. We need the account. We went through the whole onboarding. We do it very detailed, like I told you, with all the documents, etc. After the onboarding was completed, the client also onboarded some of their other entities with us as well. But because the client was not clear under the bylaws on the foundation level what he could and could not do with that account for the purpose of payments, etc., within 1 week of account activation, he came back to us saying, "Hey, I want to close the account. I want to dissolve the foundation, and because this is not working for me, this is not what I had planned in terms of the banking." So this is why I would say to all the agents, you can get my contact from the RAC ICC team. I'm happy to jump on a call early on with you and your client, tell you what we can do transparently from the get-go and what we cannot do at the moment. If that works for your client, then happy to share the onboarding checklist and onboard your clients successfully so that they can process their transactions, manage their foundations through us in a very seamless way, instead of having them go through a process with us and then come and say, okay, we weren't aware of it. So I would like to be transparent in the beginning and then take them through the journey and provide a better customer experience so that they know that when they're working with HubPay, which is referred by RAC ICC or their agents, they're working with a regulated, trusted entity in the UAE for their payments, and they can be stress-free when managing their foundations through us.
Thank you, Tafsir. And Pratik, your points, please.
I always say this to most of my clients. I'm an incorporator. I'm not a lawyer. I'm not a tax advisor. These are the two important things which an agent who offers the services in RAC ICC to offer foundation. You need to understand first the objective, ensure they're aligned with the tax advice. It's important. You can't go wrong over there. It's a key part. And the legal advice, what they need to do effectively down the line to ensure the legacy planning is upheld properly in the foundation. These are the key factors. I completely agree to not rush in offering foundation. They're one of the best way to structure the assets, one of the best tools available today, cost effective, easy to maintain, right? But if things like your tax advisor is not aligned, your objective is not aligned, then creating the foundation can be futile overall.
Great points. Thank you, Pratik. And Harsh, I'll let you also give your insights, last insights. Thank you.
Yeah, thank you. One advice will be foundation, do not see the foundation as mere just a consolidation of ownership, and do not sell this as a secrecy tool, because I have seen the many times the agent are selling that ADGM DIFC is a public register, RAC ICC is not a secrecy. My dear friends, it is privacy and confidentiality which is legal. But the creating a secrecy in today's time, as Pratik has rightly said, CRS framework, every country shares the data exchange of assets and information with each other, no matter whether it is DIFC, ADGM, or RAC. And promoting such, it is not just illegal, but it is also putting client assets and investments and family lives in danger, right? So that is why planning for privacy and confidentiality from the public disclosure, answer is yes. RAC ITC is one of the world best jurisdiction for the same. But advocating as a secrecy, I do not advocate the same. And I say in nutshell, the RAC ICC Foundation is not just a foundation or a tool to consolidate, but it is a robust asset protection tool. And that makes sure gives any family the three important pillars, which is protection of your assets, investments, and businesses against any risk that may come forth in. That is what firewall protection it is, provided you are making sure the ownership and control is properly uh, divided. Second, preserve. It makes sure that your assets are preserved, not just for your during your lifetime, but also for a succession and for the purpose for which you have created, and making sure that you prosper. Why? This is such a fantastic tool or a structure which makes your life easy for a tax deferral investment. And you may be from a country A which tax you on a worldwide, but if you create a structure in proper way with a tax and legally compliant, then it may happen that your assets and investments are compounding without attracting tax in the home country, subject to UAE tax, of course. So that means protect, preserve, and prosper. That's our mantra. We always say the RAC ICC Foundation forever to go for your enduring continuity and legacy. Thank you.
Thank you. Thank you very much. Thank you, Tafsir, Pratik, Harsh, for the wonderful insights. And for myself, this is quite revealing, if you like, insights. We usually look at the structure and then tax and legal foundation of it. And then banking comes later. But now I think after this discussion, I hope the audience appreciates that we actually need to bring the banking discussion quite to the forefront so that we can, see whether this is possible from the banking perspective, and then obviously around the structure and tax and legal foundation of it. I think the great insights here. Thank you very much for that. And thank you all for joining us for today. If you have any questions with regards to RAK ICC and how we can help you further, please reach out to your relationship managers, and you can also email us on info@rakicc.com. And thank you again for our esteemed panels. Thank you for your time all, and have a great rest of your week. Thank you very much.
Thank you. Thank you.
Thank you.
Thank you, everyone. Have a good day. Bye.